We're jumping straight into Novo Nordisk today. Everyone is watching the price action, but the real story is the massive volume surge we are seeing in the oral Wegovy pill adoption.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we really get into the weeds of what might be the most complex turnaround story in healthcare right now, just a quick request.
Go for it.
Make sure you subscribe and hit that like button on whatever platform you're on. It really helps. We're here every week breaking down the noise, and with the kind of volatility we're seeing in 2026, you're going to want to keep up.
Yeah, it's certainly not a market for the faint of heart. But let's set the stage here for Novo Nordisk.
Please.
If you've been watching your portfolio, you know this stock has been just absolutely hammered. We're not talking a correction here. This was a capitulation.
It feels like a total regime change. I mean, the stock sold off severely, down, what, 2/3 from its peak?
Roughly, yeah. It's jarring to see a company that was the darling of Wall Street, the one everyone had to own, just lose that much value so quickly.
So what was the trigger?
Well, the market hates uncertainty, and it hates shrinking guidance even more. The panic was directly from the 2026 guidance reset. Management came out, forecasted a 5 to 13% drop in sales and profit, and the whole narrative just broke. Investors saw those negative numbers and ran. They didn't wait for the nuance.
A sell first, ask questions later moment.
Completely.
But here's the interesting part. Now that the dust is settling, if you look closer, a recovery is quietly building. We are seeing major institutional accumulation at these lows.
The smart money thinks the market overreacted.
They think the market saw policy headwinds and completely ignored the on-the-ground demand reality.
Which is the core tension, right? Is this a demand problem or is it a temporary policy shock? Because one of those is a lot easier to recover from than the other.
So let's unpack the bull case. The investors buying now are betting on what I call the volume offsets price thesis.
Okay. We know pricing is down. The Trump administration's most favored nation policy, plus the Inflation Reduction Act. It's all put a cap on what Novo can charge in the U.S.
And that's a hard cap. Per unit, they are simply making less money.
Right. But the counter-argument is that volume is absolutely exploding, and it's all driven by the new oral Wegovy pill. The adoption numbers are just wild.
How wild.
In just the first 4 weeks, the pill hit 170,000 U.S. users.
Okay, 170,000 users. That's impressive, but does that actually move the needle when prices are falling?
Well, look at the velocity. The first week of 2026 alone, it was prescribed 18,410 times. That's a faster uptake than the injectable version had.
So the adoption curve is steeper.
Much steeper. And the CEO, Mike Dowstar, he's basically banking the year on this. His whole argument is that this volume will eventually fully offset the pricing hit.
That's a bold claim, though. The math has to work. If your price is down, say, 13%, you need volume to go up a lot more than 13% to break even, because your margins on the pill are different. And I think that's happening because of the form factor. This gets to their competitive moat. Novo has the first FDA-approved oral GLP-1 for weight loss.
Needle aversion. We've talked about it before, but it's a huge psychological barrier.
A massive barrier, and the pill just erases it.
It's not just fear, though. It's compliance. It's retention. The data on injectables shows a huge drop-off after 6 months. People get tired of the ritual. A pill.
Yeah.
A pill changes that retention curve.
Exactly. It shifts from a medical procedure to just a daily routine, like a vitamin. And the distribution reinforces that. We have to talk about the Amazon partnership.
This is interesting, but what does Amazon really bring to the table besides a delivery van? Is it just PR?
It's the integration. Novo is using Amazon's whole pharmacy network. Think about the friction of a traditional pharmacy, the lines, the stockouts, even the stigma some people feel.
Amazon just erases all that. It shows up at your door in a discrete box.
And from a logistics standpoint, the oral pill doesn't have the cold chain storage nightmare that the injectables did. You don't need to worry about a box sitting on a hot porch.
Which lowers the barrier and plays right into Amazon's strength. It's a scalability play.
And speaking of scale, the government. The Medicare unlock coming later this year. That is huge.
Unlock is the right word. For years, Medicare was legally barred from paying for weight loss drugs. They were seen as lifestyle products.
But now they're reclassified.
Right. They're now being classified under cardiovascular risk reduction. And that simple change opens the door to 15 million potential patients.
15 million, that's a demand floor that just didn't exist before.
It's a government-backed subsidy for the product. Now, we should be realistic. It's not a switch that gets flipped overnight.
Of course not.
It's a bureaucratic process. But It guarantees a baseline of volume. It protects them from a total collapse.
So you've got the volume, the Amazon distribution, the Medicare backing. Now look at the price. The valuation disconnect is just staggering to me. The stock is trading at 410 times forward earnings,
Which, for what used to be a premier growth stock, is incredibly low.
the healthcare sector average is 18.4 times. Novo is at a massive discount to its peers.
And usually a market leader at that kind of discount screams value trap.
But here their argument is asymmetric upside. If sentiment just gets back to normal, just back to average, you're looking at roughly a 30% upside from here.
So you're buying $1 for 70 cents because everyone's scared of regulators.
Yeah.
That's the bull case.
That's the bull case.
Okay, it's a compelling story. But it assumes flawless execution. We have to look at the flip side. There's a reason the stock is down 2/3.
All right, let's bridge into the bear case. The risks are very real.
The first one is what you call the execution trap. It's a math problem.
A really nasty math problem.
Right. It goes back to the science of the pill. To make an oral peptide like this work, you have to get past the stomach acid. The bioavailability is incredibly low, something like 1%.
So to get the same effect as one shot, you have to pack a massive amount of the active drug into every single pill.
Exactly. They have to manufacture a vastly more active ingredient, the API, to treat the same number of patients.
And that destroys your margins.
It crushes them. It costs a lot more to make the pill, but because of those policy caps, they have to sell it for less. Costs are up, prices are down. That's the squeeze.
And that's reflected in their own guidance, that 5 to 13% decline in profit.
Correct. The volume offsets price idea is just a theory. If they hit supply constraints, or if the margin compression is worse than they think, that earnings trough could last for years. It's a dead money risk.
And while they're wrestling with this manufacturing puzzle, they're not the only game in town anymore. We have to talk about the nemesis.
Eli Lilly. The shadow hanging over this whole story.
And Lilly is not sitting still. They're building a $1.5 billion war chest of inventory for their experimental oral drug, orforglipron.
And the distinction here is absolutely vital. Orforglipron is a small molecule drug, not a peptide.
Break that down for us. Why does that matter to an investor?
Because small molecules are generally much, much cheaper and easier to manufacture.
Yeah.
You don't have those same bioavailability issues. So, theoretically, Lilly could produce their pill at a fraction of the cost of Novo's.
And that $1.5 billion in inventory says they're confident.
It's a massive signal.
Yeah.
It says, we know this works, we know it's cheap to make, and we are going to flood the market the second we get approval.
So if Lilly comes in with a pill that's cheaper, maybe more effective,
Novo's first mover advantage is gone. Or worse, it becomes a race to the bottom on price. If Lilly can undercut them because their costs are lower, Novo just loses the margin war.
and that brings up the third risk, the margin compression from just overhead, the cost of doing business.
Right. Launching a pill globally, building new factories, paying Amazon. It all adds up. Their R&D and commercial spending are both way up.
And a conservative investor looks at that shrinking margin profile and says, this isn't the cash cow it used to be.
Exactly. The fear is that they're turning from a high-growth, tech-like pharma stock into a low-growth, high-volume commodity producer.
Okay, so the battlefield is set. Massive demand versus a brutal margin squeeze and Eli Lilly. For the listener trying to navigate this, what do we watch? What are the specific triggers in the next 30 to 90 days?
I'm tracking 4 key catalysts. The first one is the Wegovy vial launch.
The vial! Why does that matter if the pill is the future?
Because the pill can't serve everyone. The vial is a direct countermove to Lilly. It lets Novo offer a different price point, a different format. It's about having a full arsenal. If the vial launch is strong, it relieves some of the manufacturing pressure on the pill.
Got it. So watch for the vial release date. What's number 2?
Supply chain news. Specifically, look for updates on the manufacturing expansion into Ireland. This is key for the margin story.
They need that capacity online.
And they need it outside the U.S. regulatory system to serve Europe efficiently. If we get news that those Ireland facilities are shipping, that is a huge de-risking event.
Okay. Number 3.
This is for the science nerds. We're waiting on the pipeline data for amycretin. Phase 3 interim data is due Q1 or Q2.
And remind us, why is amycretin such a potential game changer?
It targets 2 hormones, GLP-1 and amylin, not just one. The early data showed 14.2% weight loss, which is significantly better than Wegovy.
So if this data is good, it proves Novo can innovate past its own blockbuster and beat Lilly at the same time.
Precisely. It tells the market, we have the next generation ready to go.
Right.
But if that data is weak, the bear case gets a lot stronger.
And the final catalyst.
The Medicare coverage date will
Yep.
be a firm date. Later in 2026 is too vague. Watch for CMS to publish that final date.
Once that's on the calendar, the algorithms start pricing in those 15 million patients.
It becomes a countdown clock to new revenue.
Okay, so a lot to watch. Let's wrap this up. What's the lowdown?
The lowdown is that Novo Nordisk is a market leader going through a painful but maybe necessary metamorphosis. The market punished it for policy changes, but the underlying demand for these treatments isn't going away. It's a secular trend.
My perspective, I think this is a 12 to 18-month hold. The risk feels priced in at 14 times earnings. You're buying a premium company at a discount because the market is obsessed with the short-term margin hit.
It requires patience, though. You have to be willing to sit through this earnings trough in 2026 to get to the other side.
But here's a final thought I want to leave you with. We talked a lot about Eli Lilly, but we didn't talk about the gray market.
The compounding pharmacies.
Exactly. With that compounding pharmacy loophole recently closed by regulators, which is crushing competitors like Hims, is it possible that Novo is about to regain a monopoly-like grip on this market just as the pill makes it accessible to everyone?
That's the wild card.
Right.
If the cheap knockoff versions are regulated out of existence and the needle barrier is gone, their moat might actually be getting wider, not shrinking.
It's a winner-take-most market, and the refs may have just kicked the other players off the field. That's the lowdown on Novo Nordisk.
Thanks for listening. We'll see you on the next one.